Well, thank you everyone for being here. Today we have a special guest. I'm really happy, and I got to know Patrick Carew. Thanks for being with us today.
Thanks everyone, and thanks, Mark.
That's good. Now, Patrick, he's Mr. MBA guy. He's a mortgage specialist through a brokerage with an MBA, which I think is very commendable. Now, before we get started, we're going to talk about renting versus buying. Really good topic to think through. And I would say about Patrick, as I get to know him, I think he's a very relational guy. He's a good guy, I think, to help you think through mortgage situations, the different topics you got to wrestle through and consider. And he happens to be with the brokerage, a very popular one with Meta Mortgages Group, and they're within the Dominion Lending group center. So I want to tell you that I like this guy. I get to know him, and his contact information. I'm going to put it in the contact section as well as the description section of the video, in case at some point you want to talk to a mortgage guy. I think he's a good guy, so you may want to consider that. So very good. We're going to hit the topic, okay, Patrick?
Yeah.
I'm going to ask you. We'll start with a question. So, renting versus buying. So, if a person is considering buying a home, uh, beyond the monthly mortgage payment, okay, what are some of the hidden costs, or let's say misunderstood cost or underestimated cost of home ownership here in Ontario for them to really understand as they're thinking through? Can you just help us understand that a little bit, please?
Yeah, so like on the mortgage side, what I see is there's a number of different costs that people don't kind of like factor into like just qualifying and actually purchasing the home in the first place. Those are called
Mhm.
closing costs. I think we can
Wow.
talk about that in a little bit.
Sure.
Um, but in terms of like home ownership, some things that people kind of underestimate is that your mortgage might cost less than rent, and there's a
Sure.
reason for that. I'm sure I'll talk about that in a little bit.
Yeah.
But outside of that, a lot of folks underestimate the cost of maintenance and
Mm.
insurance, your bills, your gas, your electricity, things like that.
Yeah.
Um, Generally speaking, as a kind of rule of thumb around what you should be prepared for is about 1 to 5% of the home's value in just costs to maintain the home, to keep the
Wow.
home. Uh,
Yeah.
so if you have a $500,000 home, you should be
Mm.
prepared to put out about 5,000 to, I don't know,
Mhm.
$15,000, $20,000 a year just to be paying your bills, keep the home up,
Yeah.
do like minor renovations and things like that.
Yeah. And that makes sense because we've owned multiple homes, and some homes really old and need fix. They need stuff, and then other homes they're just built well and they just from year to year. So yeah, that's good. And I don't think a lot of people typically think that through.
Um,
Um, but talk to us. You mentioned there about the typical closing costs. So they want their first time home buyer. Let's say we're talking first time home buyer. What are some things that they should be thinking about and then kind of planning the financial prep work? And I know you can help them think that through on a one-on-one Zoom call or face-to-face. Closing costs. Help us understand that a bit better. The percentages of resource they need.
Yeah, so in terms of closing costs, what I would say, like before all this process, if you're even thinking about purchasing your first home, like have that
Mm,
conversation with your mortgage broker,
mm,
and flush it out because they're going to have a lot of information for you. There's going to be a lot of things. There's a lot of misinformation that comes with home ownership, purchasing your first house. Something I always like to say to everyone or people is like anyone can buy a house, it
yeah,
regardless of your circumstances,
yeah,
and it's about what you qualify for. So a lot of people, a lot of folks that I speak with, they underestimate how much they can qualify for. They'll be
mm,
surprised. They'll go to a bank, and depending on what their bank's policies are, they'll be qualified for this amount of money. And then they speak with me, and I'll be like, okay, let's look at 30 different lenders. And You actually qualify for hundreds of thousands of dollars more, and again, we'll go over the budget and figure that out.
Yeah.
But in terms of closing costs, so bring it back. So I can actually break it down into like very specific things that I see with every file, regardless of first time homeowner, or just a regular purchaser. But it is a little bit different for first time homeowners.
Yeah.
So in terms of closing costs, you have things like lawyers. So on a
Yeah.
purchase, you have to get a lawyer.
Yeah.
That will range depending on your lawyer and the
Hmm.
complication of the file. So I'm not going to get into the nitty gritty of that,
Yeah,
but that'll
for
be
sure.
between $1,000 to $2,000 for a lawyer.
Yeah, that makes sense. Yeah.
Then you have typically people will put a condition of inspection on the property before they agree to purchase it. So
Mm-hmm.
an inspection will cost you $200 to $500, and that comes out of your pocket,
Yeah.
like even before you agree to buy the house.
Yeah.
Um, the banks will always issue an appraisal,
Hmm.
but there's different types of appraisals. Sometimes they're just done from the desk,
Yeah.
and it's about cheaper. And other times they'll actually send out an appraiser to see the value of the house, and that's about $200 to $500 again.
Okay.
Um, and then finally, the big one that I think like a lot of people misunderstand or don't really realize is land
Mhm.
transfer tax.
Oh,
So
yeah.
land transfer tax is big bucks if you're buying
Hmm.
your second, third, fourth home. If you're a
Hmm.
first-time homeowner, it's you get a massive rebate. Will save you
Hmm.
thousands and thousands of dollars.
Yeah.
And there's some distinction between a pre-existing home and a new build. On a new build, you essentially pay no tax on the
Mm.
property. Those are new laws that just came into place.
Yeah.
But on an existing property, land transfer tax is anywhere from 0.5% to 2%. So you think about on $1 million purchase, that's
Hmm.
$20,000, up to $20,000,
Yeah.
depending on municipality. Um, but for first-time homeowners, they get a massive rebate, and it only costs them pennies in comparison to somebody who's buying their second and third home.
Wow. Well, that's something else. And I know like in Toronto, they also have their municipal land transfer tax. So it's kind of like you're
Yeah, they're
doubling.
doubling up. Yeah.
Like let's all move down to our part of the world.
Yeah.
Forget Toronto, right? So
Yeah. So what I would say, what I would say is, uh, so when you're saving to buy a house, first
yeah.
off, again, I'm going to reiterate, have a conversation before you even start, like when you start thinking about this and
Yeah.
create a plan. But when you're saving for a down payment, that's the big thing. One of the big things people get caught
Mhm.
up. They're like, oh, I need to save all this money. And a
Yeah.
down payment is 5 to 20% typically.
Yeah.
And but you also need to have available to you the closing costs amount. So
That's right.
typically another like tack on another $5,000 onto whatever
Mhm.
it is. And because the banks will want to see that, the lender will want to see where your closing costs are and that you've had that in your bank for some time now. But again, speak to your broker, they'll be able to work through that
Yeah.
with you.
That's for sure. And I like that you mentioned broker because my opinion, you got the mortgage guys in the banks and they have a restrictive shelf offering of what they can do and how they can serve and help you. And then you work with a broker such as like yourself, part of a brokerage, you have access to just tons of lenders with all kinds of flexibility and option and choices. So you can meet a range of needs beyond what a typical bank can. So
Yeah,
that's
and I
good.
think like when I speak to people about like the difference, Canada is actually kind of lagging behind in this sector. Australia, I believe, does 80 or 90% of their mortgages go through a mortgage broker,
Oh, wow.
compared to the bank. Even in the US, it's higher.
Yeah.
And there's no particular reason besides people are comfortable with the banks. They're comfortable with their bank. They're comfortable with
Yeah.
what that is. And the
Yeah.
biggest difference is you're at the mercy of whatever your bank is willing to offer you at that time.
Mm-hmm.
And there's trends. So sometimes bank A is
Hmm.
amazing. And yeah,
Yeah.
you just happen to be with that bank at the right time. It's great.
Hmm.
But and bank B is terrible. And people are just like trying to flee from that bank and come to the brokers and go, give me a better
Yeah.
rate, give me a better product. So you're really at the mercy of the bank itself, what they can offer you, what they can do. Some are excellent, some of them are not.
Mhm.
Um, but working with a broker, you have access to all the programs, all the products, and pretty much every bank that there is, including alternative lending, and private lending for folks that need something like that, which would be very unique and typically not for a first-time homeowner.
Yeah. So let's let's talk about that. So let's say someone they're financially qualified, okay? They have the means to get the mortgage to get a house to own, but they choose to rent. Why would someone, what would be a compelling reason for someone in our day or in the future to be a renter instead of a homeowner? What thoughts you might have on that?
Yeah, so like when I think about renting versus buying, I'll always like advise buying, and there's a lot of different reasons. But like if I was to put myself in people's shoes and go like, should I rent or should I buy?
Mm,
I like to say to people like treat renting as a short-term solution to whatever situation you're in today.
mm, mm,
Um, like some of the pros of renting
mm.
is like low upfront cost. So not
Yeah.
everybody can save money for a down payment. I
Mm,
do want to mention that almost every municipality has down payment support programs where they will give you a percentage of the down payment to so you don't have to save for first-time homeowners
yeah.
specifically. Um, so I do like advise people to use that often, especially if they're like, not making enough money or just getting by, rents costing a
Mm,
lot. But the other pros, like I think like predictable expenses, low to no maintenance costs, like it's all money
yeah.
related. And flexibility is probably the biggest piece that I would say people like to rent. Like if
Yeah.
you wanted to pick up and move to another city tomorrow, if you
Yeah.
wanted to go on a trip that's going to be 6 months, you don't have to ask somebody to come in and make sure your, house isn't flooded or
Mm,
whatever that looks like. And I get that. However, what I would say to people is like treat it as like, does this make sense for me today?
yeah.
What does this look like for me in the future? Because there comes some downsides with renting as well. You
Yeah.
have no ownership.
Yeah.
That's a big issue. You can't make decisions around your future.
Mm,
Um, there's no predictability or security in that
yeah.
as well. Like if if you're living in a property and the landlord decides to sell, what does that mean for you? You could be there
Yeah.
for 25 years.
Yeah.
And then all of a sudden they decide to sell, and the new owners are like, I don't want tenants anymore. And now you're
Yeah.
65 years old or you're whatever. And you're like, I thought I had a good thing going.
That's right.
Um, Other things like policy changes with the government, like there was a big
Mm,
policy change that just happened that started to kind of stripping renters' rights away from them, making it easier for landlords to evict people. The
mm,
security piece, so what I would say is to kind of bring it back is like
yeah.
use it as a short-term solution to get to your long-term goal. And the
Got it.
long-term goal should be home ownership, because like that creates wealth, it
Yeah.
creates security, and it puts you in just a better place. Maybe right now is a good time to mention there is an excellent calculator
Yeah.
that'll show you. It's called from National Bank. You
Mhm.
can Google National Bank rental calculator,
Okay.
and what you can do is you can input your rent
Yeah.
and or your supposed mortgage amount, and it'll show you how long it would take before you kind of break even on the
Mm,
upfront costs of owning versus renting. How long before you've put money into the equity of
yeah.
your house? And then over the course of the next 20, 30 years or whatever,
Yeah.
how much more wealthy you've become owning a house over renting. And renting, when you rent, the money is gone forever. When you own, about half of that money is reinvested in your house into equity,
Mm,
and you're saving. And renting is always more expensive. So when I
mm,
do the averages, the calculator, it takes about three years before that break even part happens.
okay.
So which is pretty wild. So if you're going to rent for 20 years, 17 of those years, like you didn't save money. It's as
Yeah.
simple as that. So
I'll find that. that calculator online, and I'll add it to the description and in the comments so people can look at that as well. You
Yeah.
know, and so let's say, Patrick, let's say someone is not a homeowner. What are factors to be considered when a person is trying to figure out whether they should rent in our day? And I know you've talked about some of this stuff to some point, or if they should buy, because this video, it's about helping people think it through. So, what would be some factors they need to consider whether they should rent and buy? And you obviously you say stuff that you've already said, but just help us with that a little bit here,
Yeah.
please.
I think like in making that decision, I think like using renting as a tool to jump into buying is like a really important thing to do. I think
Mhm.
when you have to look at your situation um, and make that determination for you. If you need flexibility, renting makes a lot of sense.
Mm.
But buying isn't as scary as people think it is.
Mm.
A lot of folks like have a lot of anxiety around the unknown. I speak to a
Yeah,
lot of people about things and kind of debunk a lot of their myths
yeah,
around I could never own like at all. Like I
mm,
would never be able to afford to buy. I can't maintain a house. I What
yeah,
happens if I need to move? What are all these things? It's a
yeah.
lot more flexible than you think. However, if you're in university or college or off to
Hmm.
school, you just started a new job, you want to move out of your parents, or you live in a big city, things like that, like, renting might be the best option for you. But like at the end of the day, um, when you fast forward 40 years from now, like what have you done
Hmm.
in order for you to build your wealth, build your like retirement funds? Um, Something I like to mention as well to people is
Yeah,
renting is always more expensive than having a mortgage. And the reason for that is because what you're doing as a renter is paying the landlord's mortgage
yeah.
plus plus their maintenance costs, which is about $500 a month, give or take.
Hmm.
Um, so I do have some interesting stats here about like home ownership in Ontario. If we're talking about Ontario specifically,
Hmm.
uh, the average cost for a three-bedroom rent is about $2,500 plus utilities. Okay.
Yeah.
So when you're getting a three-bedroom rental unit, typically you're getting like an entire floor of a house or maybe an entire house, which is
Yeah.
great. It's $2,500, but you're paying all the utilities. You're paying the water, you're paying the gas, the electricity,
Yeah.
whatever. But the average mortgage
Hmm.
cost for a three-bedroom house is somewhere about $2,300 to $2,700, depending on where you live.
Hmm.
So you think about that as the base rate, your rent is
Hmm.
$2,500, and say your mortgage is also just on average $2,500. It's not, but say it was.
Hmm.
When you're paying rent, that $2,500 is gone. When you're
Yeah.
paying for a mortgage, half of that to 70% of that is going back into the house. So when you decide to sell, whether it's a year from now, 6 months from now, 20 years from now,
Hmm.
that money is there as, a savings for you to pull out one day.
So that's good. This is good. This has been really helpful, Patrick. And I think we'll just kind of end it there because you just gave us so much really good info.
I can
And
talk. I'm sorry.
yeah, no, that's good. And that's what I like about you is you've got a good head on your shoulders. You're able to communicate that effectively. And I'll put your contact info in the body of below the video so people can reach out to you. And we really appreciate you, Patrick, and appreciate everyone else listening in. So we'll say goodbye and we'll talk to everyone later.
Yeah, thank you, everybody. Thanks for listening. I really appreciate it. And I do believe in your future and feel free to reach out anytime. Thanks, Mark, for having me.
That sounds good. We'll talk to you later.